So, you are beginning the Forex market. This is the best video for you to watch. It's a pure price action full course. I've done 3 parts. Part A, this is part A, this is part B, and this is part C. So come with me as you learn pure price action. I'm Homie till I'm the godfather price action. Yes, sir. So, introduction to Forex trading. We start by defining what is Forex trading. So, Forex trading is simply exchange of currency. That's all. Forex is simply exchange of what? Forex is simply exchange of currency. What do I mean? For example, you have the dollar versus the Canadian dollar. So you have exchanged dollar versus what? The Canadian dollar. Another example, in our local country, there's Kenyan shilling versus the dollar, KH versus USD. You have exchanged what? The Kenyan shilling versus what? USD. So Forex is simply exchange of currency. Okay. Number 2, in order to start Forex trading, these are the 3 things you need. 3 things you need. 3 things you need to start what? Start Forex. Number 1, you need what we call broker. A broker is simply a wallet in the Forex market where you deposit. Broker is simply a place where you deposit and withdraw your money. Right. In broker, there are few things you need to understand. One of the major thing is called leverage. So, leverage, you must understand, the higher the leverage, the higher the risk, and vice versa. The lower the leverage, the lower the risk. Some brokers offer up to 1 to 3,000 as their leverage. As a beginner, I prefer you to use maximum of 1 to 500 so as to avoid what? To avoid your count to get into more risk. Right. After that, there's something called upper number 2 of the things you need to know in order to start Forex. Number 2, something called MT5 or MetaTrader 5. MetaTrader 5 is simply where you do what? Where you execute your what? Your trades. MT5 is where you execute your trades. I'll show you in a recorded video on how to use MetaTrader 5. And number 3, you need what? Number 3, TradingView. So TradingView is where you just do your analysis the way I'm doing like mine. I do your analysis. TradingView is where you do what? Where you do your analysis. So you analyze your market in the TradingView. After analyzing your market in TradingView, you go and execute your trades in MT5. This is how you use your TradingView. Yep. I've told you TradingView is where you do what? Where you do your rough work. In this corner here is where you do what? We call it the watch list. Here you add any pair you want. For example, if you want GBP card, can search GBP card, then do what? Then add. It will be added here. You see? This is where we do what? We add our currency. Here, there's something called the trend line. Trend line you can use to draw horizontal trend. For example, if your market is going upward, you can use it to draw like that. Or if your market is going downward, you can also use it to do what? To draw. Trend line is just a trend. You see? Another major thing here, you have this thing, long position and short position. For example, you're buying, you place what? You'll place your long position, then adjust it to the place you want. Stop loss, the same thing. You come here, adjust it to what? If you're buying, we use what? We use your long position. And if you're selling, come here to use what? Short. Do your short. The same thing, adjust your stop loss. Obviously, your stop loss should be smaller than your take profit. Your take profit should be big. Adjust if you want to sell. This is the tool we use to do what? Tool we use to go in for sales. Another thing, the horizontal line. Here, the horizontal line. If you want to draw a line, you can use either that one, or you can come to use this one. Both works. That one and this one. Then here, there's four types of candlestick. There's a bar candlestick, candle, halo candlestick, and volume candlestick. Line. So as we use line candlestick, if you want to see market clearly, you can switch to line. But when you switch to line, you not be able to see if your market, the exact candlestick, if it's bullish or bearish. You just see the trend. For example, here our trend is doing what? Our trend is bullish. But when you come back to the chart candlestick, you can see it clearly. So if you want to see your market clearly, you can come switch to line. After switching to line, go back to chart. So it's the simplest way of on how to use your TradingView. Here up, you have time frames. You have 1 minute, 2 minutes, 3 minutes, 5 minutes, 15, 5, 30, 45. You have the 1 hour all the way to 12 to 100 range. But the time frames I prefer you to use, you can use weekly, daily for a time frame. 1 hour, you can use the 1 minute, 5 minutes, 15, 30 minutes, 1 hour, 4 hours, 1 day, and 1 week. So this is the simplest way on how you can use what? You can use a TradingView to analyze your market. You can go to another topic, types of pairs. Types of pairs in Forex market. Number 1, we have the what? We have the major currency pairs. Major currency pairs are pairs which have dollar. If you see any pair with USD, we consider that as a major what? A major currency pair. They are called major because they are commonly traded. Example of major currency pair: Euro USD, GBP, USD, USD, JPY, USD versus Japanese yen versus USD versus Canadian dollar, CAD. There is IUD, Australian dollar versus USD. There is also XAU USD. See any pair with a dollar? This is what we call what? Major currency pair. They are called major because they are what? They are commonly traded. Number two, before we go to number two, there's something called base currency, another quote and quote. For example, Euro USD, Euro USD. This first pair, we call what? We call it the base currency. And the second one, USD, we call what? We call quote what? We call quote currency. So any pair which comes, the first one like this Euro USD, Euro is what we call a base. USD we call what? Quote. The same example, USD CAD, USD CAD. This first USD we call a base, CAD we call it quote. Right. Any pair that comes first, for example, this Euro, this is what we call our base currency, USD, our quote currency. We can go to number two, types of pairs in the Forex market. Number two, minor currency pairs. Minor currency pair is just an opposite of major currency pair. Here, definition, we don't have the dollar, no dollar. You see any pair with no dollar in it on its name, market's a minor currency pair. Example of a minor currency pair, Euro JPY, GBP, British pound versus Canadian dollar. You have British pound versus Japanese yen, Euro CAD, Euro GBP CHF. Major currency pair, pairs which have the dollar. Example USD, Euro USD, GBP USD, USD JPY, USD CAD, LD USD, XA USD. The first pair we call them the base currency. The second pair we call what? The quote currency. Minor currency pair is just the opposite, no dollar. Any pair you see with no dollar, that's called a minor currency pair. It's a Euro JPY, GBP CAD, GBP JPY, Euro CAD, GBP CHF. This is just few example of minor currency pair. Number three, we call to another pair called indices. This is my definition of indices. The simple definition of indices. These are big companies which came together to form one bigger company. I can give you an example in our local country. Safaricom, Telcom, and Airtel. They decide to collaborate and form one big company. They call their company Surf Airtel. You see, Safaricom, Telcom, and Airtel are big companies, but they have decided to come collaborate to form one bigger company. So that's the definition of indices. Examples of indices in the Forex market. Examples, we have NAS 100, we call it stroke US 100 stroke NASDAQ. That's one is simply 100 companies which came together to form what? One company. We have US 30, the same thing, 30 companies came together to form one. We have German 40, the same 40 companies which came together to form one company. You can go, most broker call it D40. You even can find, previously it was called German 30 previously, but now 10 companies were added. It came to German 40. Two. These are examples of what? Those examples of indices. Number four, exotics. Number four, exotics. Exotics, these are newly formed pairs in Forex market. Example, we can take Ugandan shilling versus Kenyan shilling. These are just emerging what? New pairs in the Forex market. Another thing, can take Tanzanian shilling versus Kenyan shillings. Same thing. They are what? They are newly emerged. Because nowadays people don't trade these pairs. People don't trade exotic pairs. People only focus on major, minor, and indices. So, two types of pairs in the Forex market. You have the major pair which have USD. We consider them as a major pair. Euro USD, GBP USD, USD JPY, USD CAD, AUD USD, XAUSD. Those are the major currency pair. Any pair which come first, like Euro, we call it the base. Any pair which comes second, like USD, we call it the what? We call it the quote currency. The same thing, Euro JPY, Euro is our base currency, JPY is our quote currency, GBP CAD, GBP is our base currency, CAD is our quote currency. Indices. Number three pair, indices. These are big companies which came together to form one bigger company. I'll give you an example of our local country. Safaricom, Telecom, and Airtel decided to collaborate to form one bigger company. They called it Saf Airtel. Example of indices: NASDAQ 100, we call it the NAS 100, US 100, or NASDAQ. US 30, we have German 40, D40, or we call it the German 30. Then we have US what? US 500. The same thing, 500 companies came together to form what? To form one big companies. So this is introduction to do what? This introduction to Forex trading. So I hope you've learned. This is part A of price action. I'm going to take you through part B, C, and D. So I'll upload another video next week. Make sure you watch. If you're new here, subscribe to this channel. If you want to contact me, my number is down in the description.